Hey everyone, it's Brandon from the Young Investors Podcast. Myself and Hamish are excited to bring you your weekly rundown of the latest business and investing news from around the world. A quick reminder before we get started that any advice provided by myself is general and does not consider your financial situation, needs, or objectives, so consider whether it's right for you. Brandon Kolk is authorised to provide general financial product advice in Australia and is authorised representative 1305795 of Guideway Financial Services Proprietary Limited, AFSL 420367. Please see the description box for my financial services guide. Past performance is not a reliable indicator of future investment returns, but with that said, let's get into another episode of the Young Investors Podcast.
All right, welcome back, everybody, to another episode of the Young Investors Podcast. We've got a bit of a short episode, I think, this week for you guys because we've got a bit of a very difficult connection. I mean, we talk about bad connection between Melbourne and Canberra. We've got quite the connection delay for this episode because Brandon is in Turkey at the moment. So yeah, how's your trip going over there?
Yeah, it's good. Yeah, apologies everyone. We do have a serious delay on our hands. I'm running off of hotel Wi-Fi, but Turkey's good. So I left Melbourne a couple of weeks ago. And there was no podcast last week. Sorry, I was on holiday. We spent a week in Dubai, just having a holiday, and that was on the way through to Turkey, where I was invited by Matt Peterson to come on this investment tour, which is like 3 days, and we're just hanging out, going to see 8 different Turkish businesses, as I'll talk about in a minute. But yeah, you guys have probably heard the messaging that, the Turkish market is extremely cheap, and Matt Peterson a few years ago heard that message and he did something about it because it's very hard to invest in Turkey. Like, you really have to do it through a fund. It's very hard. I don't think you can actually just buy Turkish stocks through any broker. And I think that's got something to do with their like tax identification and that kind of thing here in Turkey. But whatever the reason is, it's very hard. But yeah, a few years ago, Matt and some of his Turkish friends decided that they were going to do something about this cheapness, and they started up a fund here. So I'm with their fund, which is called Talus, and we're just touring 8 different Turkish businesses. So we're right in the middle of it. So this is the second day out of 3. Yesterday we toured Turkey's largest commercial bank, İşbank, and we also went to the 7th largest oil refiner in Europe, which is called Tüpraş. So there was took away a lot of interesting stuff, but I'll talk more about kind of the context, because it's important to understand the context of Turkey's economy. I'll talk about that in a bit. And then you're talking about US inflation today. Is that right?
Yeah, we've got we'll try and get to a couple of updates around the US market. We obviously had the US elections or the US election last week, and so there's been some financial market updates that I'm sure some people have seen bits and pieces of, and then we also have US inflation as well. But considering we have kind of a short amount of time today, maybe we'll just get straight into it. Because I have heard, Matt talk a lot about how cheap businesses are in Turkey. Could you maybe give us a bit of context around how cheap these businesses are, I guess maybe relative to like US markets and maybe a bit of an understanding of why that's the case?
Yeah, so we've heard how cheap Turkey is from people like, Monish Prabrai comes to mind. He talks about Turkey a lot. So yeah, I'm here scoping it out for real. As I said, Talus Fund, Matt Peterson, just running through my notes. But yeah, if we're talking about how cheap Turkey is, it's kind of insane how cheap this place is. Like, I'll give you some stats. We got this little booklet to go along with the trip, and Matt's investment partner here in Turkey has put together all these amazing stats, but it's kind of mind-blowing. So the MSCI Turkey Index, which is, I think, has 18 constituents. It represents 85% of Turkey's market cap. It has a current PE of 6.51. So that's 18 big, solid businesses 6.51 versus for example, the MSCI Emerging Markets Index at 16 at a PE of 16, and then the S&P 500 at 27. So it's quite cheap. Yeah, Turkey is quite cheap. The forward PE of the S&P is 21.7, and the forward PE of the MSCI Turkey Index is 4.5.
Yeah, that's insane. That's crazy. Yeah, especially in the last couple of years, the S&P, the US markets have become a lot more expensive.
Yeah.
We kind of saw, I think, the US market, the last time it was this expensive was a very long time ago. I think you have to go back probably, I think in 2019, the US market got kind of close to being this expensive, but you probably have to go back to, 1999, around the kind of internet bubble hype. So the US market is very expensive. And so, yeah, that's kind of crazy to see a market with a forward PE of 5.
Yeah.
So why is it like that? What's different? What's different about Turkey than the US market?
The reason that it's become so cheap, and we'll get more into this, but the reason it's become so cheap is because 2/3 of foreign investors into Turkey, have recently left. They've sold up and buggered off. So that's a very interesting little stat to know, and then it makes you question why. Why have these investors left? And as you can probably tell, it's a bit of a macroeconomic story, a story which I will now talk you through. So in May of last year, Turkey had a general election, right? It's a democratic, it's a fair election, or so I'm told by the Turkish people. There's nothing concerning about their election, but they did re-elect their president, who's now been in power for I think 22 years. Masoud was saying, but he wasn't particularly popular. So what he did in the lead up to this election, he had a very obvious political agenda. He gave the people substantial salary increases and also social benefits to improve his popularity. But to do this, he just ran the printer. So he printed just a massive amount of money. And this is at a time where Turkey's inflation rate was rising. So you can have a look at this chart. This happened in 2022 and 2023. As you can see in the lead up to 2022, there was, inflation was rising steadily. And then the money printing happened 2022, 2023. And the inflation rate just absolutely ripped. So Turkey had already seen an inflation ramp up from 8% to 20%. And that was through COVID, supply chain issues, etc. And then on top of the 20% inflation rate, the government prints a whole lot of money, and the inflation spikes up to 85% at its peak in October 2022. 85%. So it's brutal inflation. Really, really brutal. So overall you get the president, he does get re-elected ultimately. But the problem is now, sure, you've given people wage increases and social benefits, but now your inflation rate is just absolutely hectic. So long story short, of course, inflation goes through the roof. They start raising interest rates in June of last year, right? So of course, inflation goes up. You got to combat it by cooling the economy, raising interest rates. And then they raised interest rates in June last year from 8.5% to 15%. That's quite a big jump, right? But it doesn't stop there. They keep raising. So it goes from 15 to 17 to 25 to 30, 35, 40, 45, and it lands now, the current interest rate here sits at 50%. 50%. So how's that for a bit of context, Hamish? Like, what are we talking about? Like inflation in the 2 to 3% range, and America's got, what is it? 4.75% interest rate, and Turkey has 50% inflation and a 50% interest rate. So things could be worse for us.
Yeah, and I think that actually speaks to one of the reasons why hyperinflation, these kind of really high inflation rates, can be so hard to get out of, because the generally agreed idea is, or believed idea is, that interest rates need to go above inflation in order for people to actually want to stop spending. Because if inflation is at 50% and interest rates might be at 30%. But if you own a bond and you earn 30%, you're still going backwards if inflation is 50. So you kind of, in a lot of cases, you need the interest rate to go close to or above what the inflation rate is to actually make any meaningful difference for it to come down, which, when you have inflation of 30, 40, 50% per year, that's quite difficult. And obviously going to be quite harsh to businesses or people who have loans and see their interest rate go up at an enormous rate.
Yeah, exactly. And we were at Ish Bank yesterday, and they were saying that the policy from the central bank is to still give investors a real return somehow, which it speaks to exactly what you're saying. So I guess long story short, you get massive inflation. There's a little bit of election shenanigans, massive inflation, massive interest rate hikes. And then because of these massive interest rate hikes, 2/3 of foreign investment just says no. They see these interest rate hikes coming and they're like, no, this is not good. Because of course, as you know, Warren Buffett says, interest rates are like gravity to stock prices. If you increase the interest rates or you add more gravity, then it's much harder for stocks to rise and more likely that they will come down. So the interesting thing, though, is what I was learning yesterday from the Turkey investment analysts that we were talking to, is that things are now stabilizing somewhat. Now, of course, it's still out of control, but they're stabilizing somewhat. So inflation has fallen from now 75% down to 46%, which is still very high, but it is going in the right direction at least. And this is also, like, Turkey is used to some inflation, not super high inflation, but they are kind of used to it a little bit. And they are actually expecting rate cuts to start in December or January. And that's a positive sign overall for investors anyway. So the foreign investment ratio of the free float was at 68%, then it fell to 26%, and now it's starting to recover. It's back up to about 37%. So of the shares available to trade, 37% are currently held by foreign investment, and that's rising again. So what these investment analysts that I'm with are expecting is that the foreign investment that got scared away will naturally come back as the macroeconomic conditions improve. And plus, with the macro easing next year, you should see a reasonably strong stock market rebound across the board. For example, one business that we're going to look at tomorrow is Coca-Cola. So Coca-Cola, for this kind of part of the world, is headquartered in Turkey, and they've got some surrounding regions that they cover as well. If you look at their stock chart, it looks almost like this beautiful exponential rise, right? You'd be so happy as an investor. It's very consistent. It's just rising exponentially over time. And then all of a sudden, it just falls off a cliff. Like, it's pretty much straight down. And that was exactly when the interest rate hikes started. So you can really tell that it was the interest rate hikes that really changed the narrative. Everybody left, and then stock prices just fell straight down. So they're really, really cheap because they've been absolutely crushed by this macroeconomic stuff. But if you look at the fundamentals of some of these businesses, which is what we're doing on this trip, is that they've posted really strong just organic growth within Turkey. Like, the Turkish economy itself is actually doing pretty well. It's just that the macro is really messing things around at the moment. So the hypothesis is good businesses, because there are good businesses in Turkey, right? There's good businesses in every nation. So the good ones have just been, hit with this broader market stuff of macroeconomic uncertainty and high interest rates. So everything's gone down. But in the long run, these businesses are still performing really, really well, and they're really, really cheap. But they're still printing money. Like, they're still very cash flow positive. So that's kind of the rationale behind the country. And then what we're doing on this trip is going to 8 of those really high quality, cash flow positive businesses that aren't so much affected by these interest rate hikes. And we're seeing whether they present potential investment opportunities. I can probably read out these businesses in case people would be interested. So yesterday we went to Tuprash, which is an oil refiner, and we went to Ish Bank, which is the largest commercial bank. And then if I just flick through, today we are going to a grocery chain called BIM. So BIM is Turkey's largest discount food retail company. It's similar, I think they were saying it's a similar model to Aldi. Sabanci Holdings. So Sabanci Holdings is seems like a bit of a conglomerate: banking and financial services, energy, materials, mobility solutions, and then I don't know how to pronounce this one. It is spelt Arcelik, Archlik or something. I'm not exactly. Europe's second largest white goods manufacturer. A lot of manufacturing happens here in Turkey, actually. And then tomorrow, I think we're going to Coca-Cola. Don't know how to pronounce this one. Sisecam. Sisicam, not sure. And then Ford. Ford Otosan is the production hub of Ford Motor Company in Europe. So lots to see, Hamish. Lots to see, lots to do. But I'm having a really good time. I'm learning a lot. It was really good yesterday. We really going to that commercial bank, we laid the groundwork. We laid the foundation of the macroeconomic environment of what's happening in Turkey. And that was really good to do first, because now I feel like I've got so much more context to understand where these businesses are at, which is really cool. But I'm having a great time, Hamish. I'm having a good time over here. I'll have to I'll report in with the rest of the results maybe next week.
Yeah, that's what I was going to say. When we have a better connection, we'll be able to have a good discussion around this, because it seems like a fascinating experience to be able to go and see all of these different businesses and have your boots on the ground in what's going on in a very, very different financial market from what we're used to talking about.
Yeah. All right, Hamish, but that's all I've got for so far. I'll continue the discussion next week. But for now, sorry, we are really struggling with this lag. I'll chuck it over to you, because we've had an election and we've had some inflation data recently as well. So take it away, Hamish.
Yeah, from a market that's got insane inflation and it's been struggling quite considerably to a stock market that's been extremely hot, especially after the election results, which came out early last week. Of course, Donald Trump won the US presidency, defeating the Democratic candidate Kamala Harris quite convincingly as well, even though the polls kind of seemed to suggest that it was going to be quite a close race. He ended up winning by a considerable margin. He won all of the swing states. And not only did they win the presidency, Republicans maintained control of the House of Representatives and gained control of the Senate, and they also have a majority on the Supreme Court. And so when it comes to politics, that's kind of like it's like having the royal flush, right? It's like you've got the full set. And so if he wants to push I guess say like economic changes, which is kind of relevant to what we talk about, then he's got the best hand he could probably ask for in terms of making those changes. And so I think that probably plays a role, considering some of Trump's kind of economic policies, as to why financial markets kind of rocketed since the election. Some of these stats are kind of crazy. I was just looking through some different numbers. The S&P 500 and the NASDAQ are each up more than 4% since the election. The S&P 500 is now up 26% year to date. plus dividends. So close to 30% for the year. If even more if you're reinvesting dividends. The Nasdaq is up 30% for the year, plus dividends, of course, as well. There's been some individual stocks as well within that basket that have done quite well since the election. Probably the one at the top of the list is Tesla. Of course, Elon was he was quite strongly alongside Trump at the end there. And so it's probably no surprise that Tesla stock went up, but what is surprising is that it went up 31% since the election.
That's wild.
Which is crazy.
Yeah. It's crazy. Sorry, just to jump in. I've been seeing a lot online. It's crazy how much of a bet Elon made on that election, really, from a business perspective, like fully backing Trump. And, if he'd lost out, I feel like the Democrats wouldn't have been too happy with him. But now he's got, he's in Trump's back pocket. He's good friends, handshake with Trump. Trump's happy with Elon. Elon's happy with Trump. That's obviously great for like Tesla's business and SpaceX. And at the same time, he's weaseled his way to this like head of government efficiency or whatever it is. And he can now start slashing, or he wants to deregulate. But it's so funny because he's now being given the power to deregulate when his companies often complain about being regulated too hard. So he's like, whether you like love what happened or hate what happened, I can understand both arguments. What a bet from Elon. He's come out like, I don't know, that's a big bet that's paid off for him.
Yeah, it's that's I don't know how else to put it. That's the best way to put it. He's kind of staked his bet on a Republican and Trump presidency, and it's worked out, which is why the stock has kind of surged. And the stock is also probably surging as a part of just the speculative element that's happening now that markets are really frothy since the US election, because it's not just the main financial markets, the stock market that's been very positive. It's been cryptocurrency. Bitcoin is also up 34% since the election. It briefly passed $90,000 per coin, which is absolutely crazy. It's a little bit below 90 as of recording this, but it's been going up so quickly or up and down so quickly that who knows where it is when this comes out. The US dollar got a lot stronger against other currencies, which seems to be driven by the expectations of Trump's policy agenda involving tax cuts and tariffs, which are both kind of positive for US investment, businesses in the US. One thing that I thought was quite interesting was Trump media stock is actually down 15% since the election. So that one didn't kind of get pulled up in this kind of post-election euphoria, and it seems like it seems like there was probably a lot of people speculating on that stock leading into the election, and maybe that's kind of coming off now that the election trade is kind of done. So that seems to be a reasonable explanation for why that's been the case. But yeah, we spoke about Trump stock a couple of weeks ago. It's not exactly a bet on the actual business that you're buying within that stock. But yeah, markets are very, very happy, and a lot of it tends to the main economic policies that Trump seems to want to or has been talking about putting forward. Corporate tax cuts is probably the main one. Well, one of two. He's proposed lowering the corporate tax rate to 15%, which would be incredibly low. It's currently at 21%, but if you look at the US historically over the last 50 years, most of the time it's been around 35% or even higher. And so 15% is incredibly low. And so that obviously would be good for businesses. At least, in the short term. It's obviously stimulative for businesses. And then the other big policy action is these tariffs, these tax on imports. There's lots of different ways this could potentially be done, but it looks like advocated for 10% tariffs on all imports. And then higher tariffs on Chinese imports, up to 60% in some circumstances. So those are very considerable tariffs. Tariffs are not, any mainstream economist would probably tell you that tariffs are not very good for consumers because businesses just, if all businesses get an increase in their costs, all businesses raise their prices. And so it's very likely that those kind of taxes will be kind of passed on to the consumer. But selling goods at a higher price is also stimulative. So you're talking about higher stock prices anyway. And so and then as you mentioned, business regulations being cut as well. So all of these are very stimulative actions. They're all very inflationary actions. And so the result is that, markets rise, as is kind of the case with those kinds of expectations. But I guess we'll see what actually ends up being changed. We'll have to see over the next 4 years.
Yeah, there's certainly been a lot of moving and shaking, considering he doesn't even come into power until, January or something like that. There's already been a raft of kind of appointments and whatnot, but I guess you kind of have to have all that stuff ready to go going in. But it's going to be an interesting time. It's going to be an interesting time. We will see what it means for America. But yeah, I do find the tariff argument kind of interesting. I feel like if Americans actually understood what tariffs were about, I feel like they wouldn't like it as much. I feel like just a lot of them don't really, maybe they just hear the rhetoric and they kind of jump on board, but it is interesting.
Yeah, I think, tariffs in some industries, you could, if you want to protect workers in your country, you can make an argument for it. But certainly doing flat tariffs on all imports, like a 10% tariff on all imports, makes no sense because there's some things that the US just won't ever produce, right? Like you put an import tax on coffee beans, the US isn't going to start growing coffee. They can't. There's a reason they import it.
Yeah.
And so there's a lot of things that you need to import, and so the tariff doesn't do anything. It doesn't, make it easier for a coffee plantation in the US compared to one overseas, because there isn't one in the US. There's only overseas ones. And so, these flat tariffs, they don't really make any sense, from a pure kind of mainstream economics perspective. But hey, I guess we'll see.
Elon has been critical of interestingly, he has been critical of the tariff plan. I can't remember where I saw this, but he was talking to someone recently saying that actually, no, you don't want your country to try and manufacture everything. It's just impossible.
No.
And there's something to be said for countries, really taking the time and the effort to be specialists in particular areas. And then another country can focus on something else and become a real specialist in a particular area. And then the whole world benefits because instead of every country trying to be, say, generalists, then people can stick to their lanes, and countries can be known for, for example, Germany and auto manufacturing, like having German-built cars, that's their biggest export. And they can get really good at one thing, or German manufacturing maybe, and then they can, they can export that to somewhere else. Whereas, here in Australia, we're very focused on mining and agriculture, and we can focus on that, and then we can give that to someone else, and somewhere else can do something else, and somewhere else can do the coffee beans and send that to us. So I do agree that. I do agree with that kind of take. And less about the just broad, we're going to bring everything back to America because we're going to put tariffs on everything.
But yeah, I guess we'll see kind of how it all plays out over time. The general, I guess, view has been that I think this would have been the case with either a Democrat or a Republican presidency, but particularly with a Republican presidency, is that some of the policies do look quite inflationary. And so, potentially there's, we'll see a little bit of that kind of play out over over the next couple of years as kind of things take time to roll out. After all, he's not even the president yet.
Yeah.
We're still sitting here at the end of 2024, but we do have new inflation data actually.
Oh, here we go.
For the time
50%.
being. So. Yeah, exactly. No, the U.S. inflation is quite a bit smaller than that, which is good. The headline inflation figure was 2.6% for the year ending at the end of October, slightly higher than the 2.4% rate recorded last month. But still, obviously, very, very good, well within that 2 to 3% range. The month-over-month inflation figure was just 0.2%, so that's a pretty healthy monthly rate. Core inflation was a little bit hotter at 3.3%, which was the same amount recorded last month, so a little bit outside of the healthy range, but again, generally very good. And in terms of individual kind of line items, everything was pretty low for the month. The highest was used cars and trucks, which was up 2.7% month over month, and electricity, which was up 1.2% month over month. But everything else was pretty much below 1% or in decline. And the only other kind of element of the inflation story at the moment is that shelter, so particularly rents, has continued to be a large component of inflation, up 0.4% for the month and 4.9% year over year. So rent increases continue to be the main kind of part of the remaining inflation story.
Right. There you go. Yeah, very cool. So that sounds all pretty good. I mean, it is kind of funny talking about US inflation after we've just spoken about Turkey, but I mean, it puts things in perspective. It really does. But that sounds like inflation's going, I don't know, pretty well. Pretty well. I guess it will probably take time, right, to see the full effect of these initial interest rate cuts.
Yeah, it's so we've had one interest rate cut. Was it 50 basis? No, it was 25 basis points. There was two. Was there
250? Yeah, 250 basis point cuts. I'm pretty sure, but I could be wrong on that. The first one was definitely 50. The second one was either 50 or 25. But anyway, there's been two cuts. It's come down to, I think the interest rate now is around 4.75%, whereas it was at like 5.75%, wasn't it? Or 5.5%, somewhere around there.
Yeah, I can't remember exactly, to be honest. I didn't actually look at it, but
that's all right.
There is the expectation of one remaining 25 basis point cut at the December meeting. So I guess we'll kind of see how those cuts play out. But everything is quite I guess somewhat rosy, I guess, for financial markets as we've seen.
Nice.
It's just going to be a matter of we'll see. Let's see what Mr. Trump does. Let's see. I don't know if it's going to be good or bad, but we're going to watch it here from Australia. So
yeah, we're going to watch it here from the other side of the Pacific, and we're still going to comment on it.
Yeah,
we're going to have our say, even though it doesn't affect us really, and we don't even live in America.
Yeah.
That's actually interesting. No, people have. I got this a little bit on Instagram. Just to finish off, I found it quite interesting. People started messaging me, criticizing, because I was like posting memes about the election and whatnot, and I was getting criticized quite a bit about my like lack of voice and like lack of taking a stance and saying who. But to me, I don't know. I just feel like that's not at all my place. Maybe everybody, I don't know. No, I just don't feel like everybody needs to be political. Like people saying you should have taken a stand and said, what you believe in and what you don't believe in. But I just feel like saying, I'm like a 29-year-old Australian dude. Like, how would you feel as an American if some guy that's not even from your country starts talking and telling you how to vote in your own country when he doesn't live there? There's of no consequence to him. I don't know. I just feel like that's so interesting. But anyway. So apologies if my lack of voice about the election ticked off everybody, but I'm just not that political. I just don't really enjoy it, and I don't feel like I want to influence people in that way. But yeah.
Yeah, well, I mean, I enjoy politics a lot, but I have absolutely no interest in using my platform to like push my political view because I don't know. I'm just not that kind of political person. I think there's a couple of different types of like political people. Like some people have like really strong views and they think it's their duty or like they have a moral duty to like spread that as much as possible. I have like strong political views, but I don't have that kind of second component. I kind of think, you know, this is what I've looked at. This is my experiences, but you know, I equally respect other people coming at it from a different angle. And I don't really feel that I'm some grand authority to be, you know, preaching out that, you know, what I've looked at is correct. So that's kind of how I see it. But yeah, some people think that you know, you should be using your platform, and if you're not, you're doing a bad thing. But I don't personally view it that way. I think each to their own. You want to use your platform to push political stuff, that's fine. But I won't be doing that anytime soon.
Fair enough. All right, and with that said, that is us done for today. Sorry about the lag once again, everybody, but I don't know, hopefully you found this episode interesting. It's something a little bit different, isn't it? Talking about Turkey and the US election. There's still quite a bit to talk about, but we were saying, oh, we need to keep this one short. Let's go for like half an hour. We're already up to like 40 minutes, Hamish. We've been going for a while.
Whoops.
Yeah, whoopsie. But I actually do have to run because I need to get to the second day. It's currently early morning here and I need to go have breakfast and get off to the next business that we're going to analyze. But yeah, I'll tell you more about that next week, I guess. But yeah, thanks for taking the time, Hamish, to still squeeze in a podcast this week. Thanks everyone at home for for tuning in, as we always say. And with that said, we'll see you guys next week.
See you guys.